This is Scott Becker with the Becker Business and Becker Private Equity Podcast. I'm thrilled today to be joined by a brilliant financial leader. We're joined today by Neil Cohen. And Neil's had this fantastic career in finance as a chief financial officer and more. He also, a few years ago, started a company called Quantum CFO Advisory and Services. And we're going to talk to Neil today about the fractional CFO space, about trends that CFOs are watching, and a lot more. Neil, can you take a moment and introduce yourself and tell us a little bit about the fractional CFO world and really about founding your company?
Sure, great. Well, thanks, Scott. It's nice to be here. Again, I'm Neil Cohen. I'm the founder of Quantum CFO Advisory and Services. I started my company about 3.5 years ago after a 40-plus year career in finance that started out with PwC, formerly Coopers & Lybrand. Spent some time in investment banking with Shearson Lehman Brothers. And for a period of time, I was a head of asset management for a public REIT. Between all of that, I've served as CFO for family-run businesses, entrepreneurial throughout my career. The reason I started with, got into fractional CFO and interim CFO was I saw a need for, with my 40-plus years of experience, to help small to middle market companies that couldn't afford or didn't need a full-time CFO, but they needed that strategic planning to help them with their business, whether they were growing, having issues, getting ready to maybe do an exit plan. So I felt that was a part of an industry that I'd like to get part of. So that's why I started it.
Neil, let me ask you this question. You do a lot of work across industries. You're doing more and more work with private equity funds and their portfolio companies. Some of those portfolio companies might be 2 to 4 million in EBITDA. Some of those might be much larger. But is there a spot? We've seen PE funds with the portfolio companies use fractional CFOs, use outsourced CFOs. Where's the right spot for that? And is there opportunity for private equity funds, particularly as it gets harder and harder to hire great CFOs, to utilize fractional CFOs for the portfolio companies?
Yes, there is. So, PE firms, they almost act as CFOs because the key things that they focus on are EBITDA, adjusted EBITDA, loan covenants. They work with their investors, they work with the lenders. So what you need is a CFO at the portco level that is that bridge, that gap. And you don't need to have a full-time. The goal is have a really good controller that can report the numbers, watch the systems that are in place and the procedures. And then you have that fractional CFO that understands the business and the operations, understand what goes on the floor, what happens when you combine different companies and the cultures of the companies. And you need that again, it's that strategic partner that understands that then can tell the story from what's happening at the portco level to the PE firm and be able to tell that story and watch what the operations, watch the metrics that are in place, set the goals so the PE firm is profitable and they can get ready to, they can scalable and they can sell the business.
Literally fantastic. And talk to us for a second about why we see a lot of fractional CFOs today, like more so than we saw 10 years or 20 years ago. Great performing fractional CFOs, also interim CEOs. And there's a shortage at the end of the day now of accountants and sometimes people going into financial roles. Why are we seeing such a growth in fractional CFOs and interim CEOs? What do you see out there in the market?
Well, again, I think there's a need. You're seeing smaller and middle market companies that looking at it and go, I've had this controller, but they don't have that strategic abilities. And so it opens up a market for fractional CFOs or even fractional CEOs, COOs to come in and help with the company and help it grow. It's also the aging of the CFO. There are a lot of CFOs that are getting to the point where, like myself, with 40 plus years experience, didn't want to retire or still wanted to help companies and use my expertise. So it's opening up. And it's also opening up in fractional HR situations also for companies where, again, they don't need a full-time experienced HR person, but they need that person to set up the strategy and the procedures for a company so it protects them.
And talk a little bit about, you mentioned the CFO. When I see CFOs out there, and have seen a whole different mix of those that are deeply making sure all the numbers run on time, the trains run on time. They're extremely good at that. And then some percentage of CFOs that also are sort of like side by side with the CEO in terms of strategy. What's that mix that you see out there of sort of, the table stakes is doing all the numbers and make sure the numbers work for the organization, and maybe treasury and some other efforts as well, working with banks, whatever you got to do. What's the sort of breakdown of CFOs that go that next level, that are deeply involved in strategy with the CEO, and any observations there?
Yeah. So, most people who are coming out of public accounting have always been reporting the numbers. You report the history. It's not about looking forward. And that's what most CEOs need today, or just plain old business owners. They need that person that can sit down and say, okay, where we're going, what does our numbers look like? The old thing is, they look at profit, they look at EBITDA, and they go, oh, there's my number. It's great. But then they forget about cash flow. And then how do you grow? And you need someone that's that strategic partner that will tell you no at a time too. And a lot of CFOs or even controllers out there, they never say no. It's always yes, okay, I'll do it. It's being able to say no, but back it up and talk about how do we do this to do it the right way.
And I'll ask you a question. Let me ask you this next question. Then I'm going to give you a separate question, and we'll see if you're prepared to answer it. So the first question I'll ask next is, at what stage does a company truly move from full-time CFO to fractional CFO, or can very large companies, scale with outsourced CFOs and outsourced resources?
Yeah, so it's usually when a company, I always use the thing about a company, what I do is try to help make a company fundable, bankable, and sellable. And that's when a company needs that strategic planning. Fundable. How am I going to go raise money? How am I going to go ask money from a lender? How do I get ready to sell? And that's when they need that partner in there to help them structure it and make sure they have clean financial statements. They, all their margins are in line. Their regulatory issues are taken care of. So, that's the time when you really need to have that strategic partner in a CFO.
Thanks. It's not necessarily size dependent, or it can be, but there's some smaller size company that outsources everything or uses fractional everything, fractional law firm, fractional CFO, fractional everything. Is there a dollar number, a $50 million company, a $10 million company, a $100 million company, where they probably going to build their own internal CFO team, or not necessarily?
Yeah, it all depends on how complicated the business is. In other words, if you're a heavy manufacturing company, with heavy, up in the $200 million range in revenues, you're going to need that full-time CFO in there. I do have a hospitality client that's in the $200 million revenue, and I act as their fractional CFO. We have a really good controller. We put in good systems, and they don't require it now. But I also have a client that was doing $1.5 million and wanted to grow, and brought me in, and I helped them grow where they're up at $5 million now. So, it all depends on the business and their needs and where they want to go.
And let me ask you another question. And I'm going to give you a preface first. Are you ready for a tough question, or can you handle it?
I'm always ready for a tough question.
So here's a tough question. You're a UT graduate, UT Austin, one of the great undergraduate business schools in the country, top 5, top 10, fantastic school. Is Arch Manning the answer or not to the Texas football challenge of trying to be elite as a football program again? Is Arch the answer or not?
Arch is the answer.
There you go. Unequivocally.
Arch is the answer. He's got great pedigree. His issue was that he didn't have a good offensive line at the beginning of the season. They were young, and they've gotten experience. And Arch is the answer. The guy's unbelievable.
There you go. I love to hear it. God bless you. I hope so. I'm a Texas fan. I hope they do well. Next question is, when you think about founders and financial mistakes they make as they try and move from revenue to profitability, or they try and grow, any things that you see founders or CEOs, errors that they make that you've seen in history that could be addressed in different ways, and any things that sort of stand out to you?
Yeah, founders are, one, they've started the business and they think they know everything about the business. And, they say, well, we're making revenues, and they don't watch their numbers. That's one of the biggest things. They don't get into, they get into the part where they start working in the business and not on the business. They don't watch their numbers. They don't look at what they're doing. And had a lot where, well, my EBITDA is great. My revenues are great. But guess what? No one's watching cash flow, and they're not watching what's going on with their cash flow and watching the cash conversion cycles. So, those are the key things, and they just don't project out. They don't look to the future. They just say, I've been doing this by the seat of my pants. I had a client where he told me he understood his gross margin, and I said, well, what does it mean? And he goes, well, it means I'm making this percentage. And I go, well, let's dig into it. And we're digging into it, and we realized he was leaving a lot of money on the table. His staffing, his labor was way higher. He actually cut 30% of his, 10% of his staff in about a week after we went over the numbers. So they lose sight of where they're going and how to grow the business.
Thank you. And how important is it to have a regular sounding board as a CFO, internal, external, that could talk through those things with you and keep you sort of structured and thinking about pricing, revenues, expenses, and cash flow? Because at the end of the day, like armies run on food and logistics, businesses run on cash flow, and without cash flow, you can't do anything, right?
Oh, definitely. There's two quotes I work with. One is from Warren Buffett's old partner, Charlie Munger, where he said, EBITDA is bull. And another one is one from, is it Michael Dell? And I'm not quoting exactly, but where he said, we were watching the speedometer so much that we forgot to watch the gas tank and we ran out of gas. So again, it's watching all your dials that you have out there and making sure they're performing. And again, a lot of times the companies, they're not set up for that. They look at, I got money in the bank, I pay my bills, and that's it. And then they wake up one day. I was actually I was working on an M&A deal. I was brought in the middle of it, and I had to help reclassify all their financials and make them more, help make the company more valuable looking. Sat down with a potential buyer, and the buyer increased his price for the company because he saw more value there. It's just being that strategic partner again with the owner. And I was brought in the middle. Imagine if I was brought in 2 to 3 years out when you're trying to sell your company, getting it ready for that sale and getting all the bells and whistles, how much more value you can get out of the company.
No, and how often do you see that where founders are scared to price right because they're trying to price low to bring customers in? How often do you see that versus pricing a little bit higher? What's your any Gestalt thoughts on that?
Yes, there's definitely the price volume matrix is a key thing. As CFO of a hospitality company, our COO would not raise our prices, our ADR. And I was looking at they call star reports, which is market reports of what's going on. So look, we have the best product and we're below rate on all these the market's 86% occupied. Our rate's below all our competition. We need to raise our rate. And he fought me on it. And then finally the owner said, wait, let's test it a little bit. It increased on an annual basis, on a trailing 12 basis, our revenue $300,000. Just looking at the price volume and testing it to see how much more we can move it up.
It's so important. And often people, instead of doing one big adjustment, they'll do periodic gradual adjustments, and the customers get comfortable with them and understand the value of what you're doing. And if you don't price well enough, you can't take care of your team well and run the company the right way, right? I mean, you can't, It just doesn't work.
Yeah. And, an example too, in the hotel industry, in 2008, during the crash, all the hotels started to lower their rates. When the crash was over and it came back, they were having a rough time raising their rates. During the pandemic, they did the opposite. They kept rates steady or they raised the rates. And that's why rates in hotels right now is so high, is because they kept the rates higher and it's staying out there.
And are there a couple industries that you spend a lot of your time in versus others, or across industries?
I've been across industries. One industry I do stay away from is cannabis, just because it's really hard to bank with that. And that's one of the easiest things you should be able to do is have to do your banking. But right now, I have clients that are in the consumer products, e-commerce. I had a SaaS company for a while. I have a bunch of different contractors, hotel, hospitality, real estate right now. So I'm pretty diverse with the groups I'm doing and been able to help them achieve their goals.
That's fantastic. Are there a couple of metrics that every company, every CEO, every CFO should be looking at regularly? A couple of key metrics, key dashboards. I know we talked about cash flow, which I'm a huge believer in. Other metrics that CFOs, leaders should be looking at regularly.
Yes. Again, cash is king. So you have to watch that. The other is revenue and understanding what's your revenue mix and how you're getting it, who it's coming from, what customers are generating, what products are selling. So you want to look at the metrics that show you what are you selling and what's not selling, because you might be what's not selling, get your sales force to focus on it, looking at your gross margins from that to see what is profitable to the bottom line. And then also look into future, looking at the pipeline, looking what's out there that's coming in, keeping on top of your sales force or to see what's going to come in, what's the future look like, and where do I need to scale back or where do I need to push a little bit more?
And Neil, what are you most focused on and excited about this year? Anything that you're particularly focused on and excited about this year?
For me personally, in my company, I want to focus on working with PE firms. I think PE firms, actually, my first client as a fractional CFO was a PE firm. And what I learned from that is that, in their portcos, they don't really focus on they don't have this, they don't need a full-time CFO, and they don't hire that CFO that that understands the business. They understand producing the financial statements and et cetera, but I want to work more with PE firms to help them grow the business, because that's what they want to do. They want to sell the company. They want to grow it eventually down the line. Otherwise, just from a business standpoint, I think this second half of this year is going to be very good for business across the board.
Thank you, Neil. And let's hope so. Today, at least, is a good day in the market. Let's hope that continues. And God bless your thoughts on the business side. Again, we're visiting today with Neil Cohen, founder, Quantum CFO and Advisory Services, does an incredible job of serving as a fractional CFO for companies of really multiple different sizes, and has had an incredible career, very gifted person. And I hope he's right about the UT, but overall, just fantastic to visit with Neil Cohen. Neil, thank you so much for joining us.
Thank you. Thank you very much.